Good morning and welcome to the Killik & Co market update. The financial press has been focusing on little else this week aside from the horrible situation that's still happening in Ukraine. But despite the ongoing conflict and violence, global markets have actually been quite resilient. Here's a chart showing the MSCI World Index in percentage terms since the start of this year. You can see the index is down about 8% for this year so far, but is actually slightly up since the invasion started last week. And we have seen some notable strength in particular areas of the market, particularly defence. Here's a chart showing the S&P Aerospace and Defence Index. You can see it had quite a drop during COVID, but it has had a very notable spike over the last couple of weeks following the invasion of Ukraine. NATO countries are required to spend 2% of their GDP annually on defence, but in practice, over the last few years, most countries have been quite a way below this, especially Germany. But Germany has now come out and said it will be significantly increasing its defence expenditure, and that has led to some strength in defence stocks over the last couple of weeks. It's also likely that we'll see more spending on cybersecurity. And here's a chart showing the I Spy Cybersecurity ETF. You can see it was caught up in that growth sell-off that we had at the start of this year, but there has been a notable rise over the last couple of weeks, again since the invasion of Ukraine. Many companies have been announcing they've been severing their business ties with Russia. For example, Apple this week announced it would no longer be selling its product into Russia. Russia currently accounts for about 3% of global GDP, so for most international businesses, stopping selling products into Russia will hopefully not have too severe an effect. However, for most individuals and businesses, the impact of the rising energy prices that are resulting from this situation will be much harder to bear. Russia is a major exporter of oil and gas, and although Western governments have not yet officially imposed sanctions on Russian energy products, we are seeing a sanctions effect happening anyway. Buyers are refusing to buy Russian oil, and also we're seeing that global shipping companies are refusing to transport Russian oil. For example, this week, 6 major shipping companies, accounting for over 60% of global shipping capacity, have announced they will now refuse to transport Russian oil. This rejection of Russian oil is causing a spike in the price of non-Russian oil, and you can see by this chart here that the price of Brent crude has moved up very notably over the last couple of weeks. Russia is hugely dependent on energy exports, and there's no doubt the current situation will be having a hugely detrimental impact on the Russian economy. The level of sanctions imposed on Russia so far has been absolutely unprecedented. Nothing of this level has ever been done before, and therefore it's quite difficult to work out exactly what the impact is going to be. However, it's almost certain that these sanctions are going to have an inflationary impact. Here's a chart showing euro area inflation over the last 10 years. The overall level of inflation is shown by the pink line, and you can see that for most of the last decade, inflation has been relatively low, but it has started to move higher recently. In fact, it's moved above 5%. The orange line shows energy price inflation, and you can see this has been much more volatile, and it's moved very high recently, and this is the main contributor to the overall level of inflation moving higher. So if we do get any formal sanctions on Russian energy, it's likely that inflation across the whole world will move higher. We're also seeing severe inflation in wheat prices. Here's a chart that you can see a big spike in the price. Ukraine is often referred to as the breadbasket of Europe, and trade has been severely disrupted there, and also Russia is quite a big exporter of wheat as well. More sanctions are reported to be on the way, so we're just going to have to wait and see exactly what those are. Moving on to have a look at next week, we've got results out from Prudential, Deutsche Post and Essilor Luxottica. That's it from us. Enjoy the weekend, and we'll see you next Friday.